having to, if you like, adjust my thinking in a way, because of course I'm looking at the charts and I'm seeing incredible levels of overboughtness in gold itself, which you will see on one of our charts that we'll be looking at a little bit later. Incredible levels of overboughtness, which is why it's got me a bit nervous as a technical analyst or chart follower, because it's unprecedented. And I'm having to kind of adjust my mindset to a certain extent because these are truly extraordinary times, unlike any other we've ever lived through, which means that you can have gold and silver get very overbought and stay very overbought and continue higher anyway, which is what's actually happening at the moment.
Monaco 64, home of alternative economics and contrarian views. Today, I have the pleasure of speaking with Clive Maund again. We've spoken twice already. Clive, welcome to the channel.
Oh, thanks, Mario. Good day to you.
Good day to you too. And
I say good day, Barry, because depending on where the viewer is watching this, it could be morning, evening, or night. So
yeah, that's the thing about the internet. I mean, you can talk to someone anywhere in the world, and it could be like a different day or time of the day as well. And I've got here. Let's have a look. Yeah, I've got the dates that we first spoke and second and our second interview. The first time we spoke on the channel, Clive, was September 6th, 2025. And I entitled our interview, The Man Who Called the Silver Plunge in 2011 is Now Mega Bullish. And at the time, silver was at $41. And here we are. Silver is at 51.42, excuse me. So
yeah, yeah.
we're up $10 since then, and gold is at 4,073. It was at 3,600 at the time. So yeah, you were right about being mega bullish, and I mean I was mega bullish too, and I still am. And the second time we spoke was 20 days later, and you said the precious metal market is overbought, but we are in the end game, and you're right. It's just kept going up, and you hear a lot of people saying, "Oh, it's going to correct. You need to get out." And I
Yeah.
could understand for people who trade the paper market, but not stackers, of course, or the miners. You might want to take profit. So that's where we left off. But let's start though with the stock market because you sent me an interesting chart. And the day we're speaking, by the way, is Monday, October 13th. And you'll probably be seeing this video tomorrow. Should I share the chart or do you want to say something first?
Yes, yeah, you could put the chart up, Mario. Yeah, it's
Yeah.
um, yes, the stock market dumped on Friday in response to Trump suddenly blurting out they were going to impose 100% tariffs on China. But as we know, Trump is I think the futures are up this morning, and I think there are two reasons for that. Basically, one is all the ballyhoo about Trump being in Jerusalem. I think it is, talking at the Knesset, and everybody's feeling very ebullient about that, or some people are anyway. And the other thing is, he probably saw the effect of what he said on Friday on the markets, and he's backpedaling a bit, Trump is notorious for blowing hot and cold, or saying one thing and then reversing his opinion or statements a few days later. So it's I still think the stock market's looking very fragile here because as we saw on Friday, it breached that downtrend on Friday, a downtrend that's been in force since May. And the underlying problem for the stock market is that the economy is just going down and down and down. And the only thing that's been keeping the market going higher and higher, not just for months, but for years, has been Fed largesse. They've just been pumping money into the system ad nauseum. It's just been going on and on and on and on. But the increasing divergence between the real state of the economy and the stock market. The real state of the economy is deteriorating rapidly. And I've been watching some videos in recent days, which is saying that people are so broke. The middle class in the United States are now becoming so broke, so overstretched, they're unable to pay their bills in the face of rampant inflation. And it's starting to hit the car market severely. Car dealers are getting stuck with inventory that they can't sell, not because people don't want to buy the cars or change the cars, but because they're broke. They cannot pay all these bills, and so they're tending to keep hang on to old cars, not change up and so on. And that's an indication that the economy is sinking fast in the face of increasingly rampant inflation, which of course is why the precious metals market is going up and up and up to compensate for the loss in value of the currencies. This brings us full circle, if you like, back to the precious metals. But the point with the stock market is that this divergence, this yawning gap between the stock market performance and the underlying economy is just getting bigger and bigger. And at some point it's going to break, and it could break soon.
Yeah, and I've been speaking to some people where I also watch some videos as well. And if you strip out, let's say, all these different sectors from the Nasdaq or S&P and just leave the Max 7, the stock market has done really badly this year.
Yeah.
Yeah, Max
Yeah.
7 and the AI main
Sector.
index. Yeah, and
Yeah.
even actually AI expenditure in the second quarter in the US was accounted for half of GDP growth.
Mm.
So
Well, the AI sector, some people have been saying that the AI sector is a bubble, in as much as not because the AI is not going to become prominent and take over, it is, but of course, because the speculation in the stocks runs ahead of, if you like, the fundamental developments in the market, in the real world. So what happens is you get a gigantic speculative mania in the stocks themselves in anticipation of the growth of AI, but it runs too far ahead of it, and then you get a crash or mini crash. So you could have the AI sector drop hard, not because AI is not going to be the thing of the future, but because the stocks have run too far ahead. I'm going to say there's an analogy between that and actually exploration stocks, where an exploration, a gold or silver exploration company makes a big discovery, and the stock roars up and it gets way too far ahead of the fundamentals. And then you get this massive hangover when during the period when the company has to find the finance to build the mine to realize the discovery that they've made. You know what I mean?
the AI bubble, and I think it is a bubble. I think even Jeff Bezos of Amazon said it's a bubble. Reminds me a little bit of the dot-com bubble from the
Yes.
mid 90s
Yeah.
to the early 2000s. And then we saw a huge drop in the Nasdaq. I think it was 80%, or
Yeah.
you might remember more.
Well, that's a good point, because if this AI bubble bursts, it of course will have a knock-on effect into the stock market generally, which is helping to buoy up, as are those big tech stocks, or as they have been, like Nvidia and so on.
Yeah, and the other thing about AI is that a lot of the financing for the AI expenditures is coming from the private credit, private equity market. It's not coming from the banks, and it's
No.
really opaque. So, yeah, I think we need to keep an eye on that. And do you think then precious metals are trying to warn us about that?
Well, the one thing that's been concerning me in recent days, as far as precious metals market is concerned, is that there are very powerful companies, banks like JP Morgan, for example, which have huge short positions, for example, in silver, and it would help them if silver did not race ahead here because of their huge short positions. And because the precious metal sector is so overbought at the moment, which does not, as we know, does not necessarily mean it won't go higher. But if we had a severe drop in the broad stock market, or even a crash, it would provide the perfect excuse to knock down correct the precious metals temporarily, and then they would obviously turn around and go roaring back up again, because it doesn't change the fundamentals, which is that the currencies are going down the drain at a very rapid rate. In fact, this is the primary reason that the precious metals are appreciating because they're real money.
Before we proceed with the interview, I just wanted to let you know that there is a Rudy Collection merchandise store for the channel. There are mugs, shirts, hats, cushions, and the Fed mugs, get stacked mugs. So, yes, check out the link below in the description. Yeah, I mean, I've been following precious metals since '02, and it has been a long track. I've become immune to a lot of the volatility. I used
Yeah.
to get angry, when they came in and used to smash the price, but I try to stay even keel. But I've never seen precious metals like gold and silver move so much, like
No.
it's in such a short period of
No, I mean, I'm having to, if you like, adjust my thinking in a way, because of course I'm looking at the charts and I'm seeing incredible levels of overboughtness in gold itself, which you will see on one of our charts that we'll be looking at a little bit later. Incredible levels of overboughtness, which is why it's got me a bit nervous as a technical analyst or chart follower, because it's unprecedented. And I'm having to kind of adjust my mindset to a certain extent because these are truly extraordinary times, unlike any other we've ever lived through, which means that you can have gold and silver get very overbought and stay very overbought and continue higher anyway, which is what's actually happening at the moment. And we'll have a look at that on a couple of the silver charts later,
yeah.
Mario. And so, it's actually a kind of difficult balancing act because on the one hand, I see this massively overbought condition that by itself calls for a correction. Yet at the same time, I recognize that the fundamentals, as Mike Maloney keeps pointing out, are completely unprecedented. In recent days, you've had developments like the Perth Mint saying it's got no silver. And there's no silver to buy. I thought I saw this morning there's no silver to buy in India, things like that. In other words, the physical market is completely drying up in
Yeah,
silver.
the other thing, Clive, is if you take profit, let's say, of your physical, especially, but also of your miners and stuff,
Mm.
where do you put the money? Because I was reading about
Yeah.
First Brands, this company that went bust out of nowhere, and there's like $2 billion they can't account for, and there are investment banks that have put money with them, like Jeffries, I've heard, and a lot of people don't want to deal with Jeffries anymore.
Mm.
So yeah, do you put if you've got a good substantial amount,
Well, I
do you
want,
put it in the banks?
well,
That's the
what,
thing.
there's one thing I want to be clear on here, which is to your point, which is that if you own any physical gold and silver, you do not sell it under any circumstances at the moment because it'd be impossible to get it back.
Yeah,
Really. And what I would say is, where you have a situation where the market's, the precious metals stock market is extremely overbought, well, gold itself is extremely overbought. For those who are a little bit more sophisticated, I think the correct strategy is to actually buy a line of out of money puts as not for speculation, but for insurance. So if they do create a sudden downdraft, if the stock market tanks and it takes the precious metals temporarily with it, for example, if you do a line of out of the money puts, right? You're not buying them for speculation, and it's not much of an expense because they're cheap. You're buying them for insurance. So if the price of gold or silver fall below a certain level, you're covered point for point on your loss. And then if you see the sector bottom after, say, a plunge, a short-term plunge, you see it bottom. You think you've got a bottom. You close out those puts for a massive profit, and you switch back to long.
yeah, no,
And you're actually making even more money because you're holding onto your physical, you're not losing it, which would be very difficult to recoup.
yeah.
But you're also making a lot of money on the short side if it tanks, which is you don't know whether it will, but you're doing those puts as insurance just to cover you if it does drop hard, which
And,
they might organize because I saw a thing, somebody sent me a link the other day saying that on Friday, they dumped 130% of a year's supply of silver, paper silver, on the market in an attempt to stop silver going up, and it didn't work.
No, no. I mean,
So,
that paper is not real, right? But yeah, I guess the reason you're saying that if you get rid of your physical, it's going to be hard to get back in is because the premiums are starting to rise now because there's so much physical demand. And a lot of times you look at at least here in the UK, you look at the dealers and
mm.
they're like withholding or they don't have access to coins and bars, and they say you're gonna have to wait 5 working days. Things are, and I've seen that for weeks or months even. But anyway, do you want to move to the next chart? Let me know what.
Oh, just with
Oh,
regard to your last point, which is very important, Mario, right? There's 2 points here. One is it might be very if you sold physical gold and silver now, it might be very difficult to get it back because of sourcing it. Secondly, you might have to pay high premiums.
yeah,
So
yeah, yeah,
yeah, so I mean, it's just not worth selling it.
yeah,
Better to just to
yeah.
hedge a bit. If you think it's extremely overbought, just put on some hedges like puts, just to cover yourself in the event that it's not so much even covering yourself because gold and silver are real money. You don't care about what the
Yeah. I mean,
paper price is. What you're doing is
one ounce of silver is always an ounce.
yeah, what you're doing though is you're being crafty because you're saying, okay, I recognize it's very overbought. I recognize, the powers that be could organize a short-term plunge. And if they do, I'm going to make a lot of money out of that as well. And if it
Yeah.
plunges short-term, I close out the puts or the shorts, switch, make even more money when it goes back up.
Yeah, I remember Clive back in '08, and I'm gonna actually bring the chart up here from a long-term chart. So I'm gonna share it with you and the viewers. I remember when Lehman collapsed, and
Yes.
gold had topped here in March, or just over
Hmm.
1,000. And
Yeah.
then Lehman collapsed and gold dumped to like 680 or just
Was
below
that back
700.
in, that was back in 2008, was it?
Yeah, that's right.
Yeah.
I
Yeah.
remember it really well at the time I was working in the city. I was talking to one or two colleagues who were into good gold because the rest had no
Hmm.
clue. But we were trying to buy gold here, and we were calling the dealers, and the premiums were like at least 10% if you could get the gold, and then all of a sudden it just went right back up. So what?
Hmm.
And this chart, maybe if I put it as a monthly chart.
Well, that chart there is interesting because you see how when the stock market tanked in 2008, temporarily it took the precious metals with it.
Yeah, but one a point I wanted to make as well is that this blip, this drop is in the scheme of things,
Yeah,
uh,
it's just a
it's
blip.
still in an upward trend. So
Yeah, yeah.
this is where we are right now. Yes,
Hmm.
there could be another blip, but I think it's going to be short-lived as well. So anyway, yeah, what chart do you want to look at now?
Um, well, we could look at the copper chart
Copper,
because
great. Yeah.
yeah, the reason being that it relates to that dump in the S&P 500 on Friday.
Oh, okay.
Because that was what happened was Trump put the jitters into the markets because of this talk about 100% tariffs on China, which of course, if he follows through, you remember how the Smoot-Hawley tariffs in the 1930s basically created the Great Depression because they killed world trade. And these tariffs that uh, Trump has been doing this year, this global tariffs, is basically a throwback to the 1930s. But because tariffs are the enemy of capitalism, the enemy of free trade, they destroy supply chains. And in an article I posted on my site yesterday, I described how the effect of these tariffs is just lose-lose. A simple example is when I visited the States years ago, say 5 or 10, not say 10 years ago, walked into any shop like Dollar General or quite any shop, and it's full of stuff full of cheap Chinese goods. And it was a win-win situation because US consumers were able to buy goods made in China dirt cheap. And over in China, millions and millions, countless millions of workers were able to work in factories producing this stuff. And they were working like 12-hour shifts, sleeping six to a dormitory and all this kind of stuff. But it was making the goods competitive. And so it was a win-win situation all round. But when you impose tariffs and you suddenly say to Chinese exporters, your goods are suddenly, you're now going to cost 100% more in the US. Basically, you're shutting them out of the market. US consumers have to pay a lot more for stuff in the shops, and the Chinese factory workers are thrown out on the street. And that's what's been happening. And any more of this, 100% tariffs and so on, it's going to have the same effect. It's going to really cool down the global economy or create a depression, in fact, just as it did in the 30s, which is why you see copper dropping there in fear of that and also the broad stock market on Friday. So basically what it means is if that scenario is to be averted, these tariffs have to be dropped. And if they're not dropped, they'll create a depression.
Yeah, I saw this morning that copper actually rebounded back above five, high grade copper. I guess it's
Yes.
because of the
Yeah.
backtracking by Trump. But for tariffs, I guess Trump's argument is that in the 19th century, the US used tariffs to build its industrial base. But I remember Clive growing up in Brazil in the 70s and 80s, and we had a closed economy to imports. You could import like cars from abroad, but you'd have to pay 100% tariff. So the very wealthy, they would buy Mercedes and Porsches because they didn't care.
Yeah, a bit like the regime in North Korea. Yeah,
Yeah, but well, they Volkswagen, General Motors, Ford, Fiat, they all built factories in Brazil. But we I was fortunate enough to travel abroad quite a bit because my dad had his own business, and I could tell the quality of the stuff that you bought in Brazil was really bad compared
oh, yeah,
to the quality abroad because we are trying to build this own indigenous industry, and it didn't work really. It didn't work, and
yeah.
it seems like that's what Trump's trying to do. And even if they succeed, because America, you can't, I guess it's more of a first world country, but it's going to take a long time for them to like bring back all the industry and the supply
Oh,
chain
yeah.
because you don't
Well,
just build a car factory. You need all the other factories that build all the different parts.
it takes an awful long time because what's happened is the US is becoming deindustrialized, and it takes a very long time to recreate all that infrastructure, as you rightly say.
Yeah, and
And
also train the workforce.
well, it's made the United States very vulnerable because it's not producing much. If the dollar goes down the drain, people are going to get much poorer than they are now because it could cause the dollar to tank. Because the US economy basically has been based since 1945 on swapping dollars and treasuries for goods and services from other countries around the world. And that's what's provided the motivation for all these companies chasing cheap labor to outsource to places like China and Indonesia and Vietnam and so on. And the net result of all this is that there's very little productive capacity left in the US, which is terribly vulnerable because it's dependent upon swapping dollars and treasuries for goods and services, and increasingly other countries around the world do not want dollars and treasuries.
Yeah, it's a little bit like what Britain went through, I guess. From after World War One till now, the decline.
Yeah,
I mean,
yeah,
I heard a story that in the 1920s there were like dozens of motorcycle factories and brands in the UK. Now
yeah.
you'd be hard pressed to find
Oh, yeah,
anything like that.
yeah. And there's an old saying, right, which I remember. I remember once when I was a kid, I went playing mini golf or something with my dad, my family, at a beach resort in England, and I won. And then we went back there the next day and I lost and I was really sad. And my dad turned to me and he said, "You can't ride the white horse all the time." And that's what happens with empires. You had the British Empire that went down. You had the American Empire basically all of the 20th century, and it's fading now and
Yeah,
trying to keep going by imposing its will militarily on various parts of the world. So
yeah. Which do you want to go to that silver and gold chart right now?
I think the gold chart would be the gold long term. That
Oh,
would be a good
yeah.
one because we
Yeah,
can.
because there's a silver chart on top
Hmm.
of it.
Ah, yeah, that's right, which is actually helpful. Yeah,
Yeah,
because
let
we
me
can.
bring it up. Uh, this one?
That's it. That's it. Oh, yes. Yes, because this is the chart that has got me a little bit nervous, you see, over the last few days, because I mean, it's even bearing in mind, the unprecedented circumstances and how, fiat currencies are going down a drain and gold's just going to go up and up. It is so overbought now. It's insane.
Yeah.
If you can
I
see that
mean,
on the bottom.
this is an arithmetic chart, though, isn't it? It's not like a
Yes,
logarithmic. Logarithmic doesn't look
mm,
as steep,
no.
but
No,
yeah,
that's not the point. No, look at the
yeah,
bottom of the chart there, Mary. Look at the bottom
yeah.
of the chart and you'll see the MACD indicator. And
MACD,
that's
yeah, yeah,
Yeah, that, I mean, it's showing a massively overbought condition. So all I was saying was, I'm not saying that this bull market's over by any stretch of the imagination. In fact, it's going to the moon as far as I'm concerned, because we are at the end of the fiat experiment. Most fiat currencies are going to become worthless over the next few years. So we're talking about global hyperinflation, which is already starting. My point here on this chart is that it is now frighteningly overbought. And which is why I'm not talking about it tipping into a bear market or anything, but there is a real risk of, a shakeout, shall we say. And which is why I was saying earlier, maybe, those who have, a good thing to do here, in my opinion, is to hedge to a certain extent, ideally with puts because they're very cheap. But what you're doing is just buying some insurance if it gets whacked by short term, by say the stock market dropping or whatever reason, uh, you're insulated from it, and you can even turn it to your advantage and make a quick buck, so to speak, out of a sharp drop.
yeah,
And then you just reverse out of it back to long and increase your what you're making out of a
yeah.
situation.
I mean, I agree with you looking at that and having, when I like technical analysis and fundamental, but this does look very overbought. But like you said, even at 3,000, it looked very overbought. So,
Hmm. But I'll
uh,
tell you, there is a very interesting point to observe on this chart as well, Mary, which relates to what you're saying, which is if you can see the silver chart at the top of this chart, and notice how the silver chart it's only just breaking out of its enormous cup and handle that's been forming since 1980. It's just starting to break out. Yeah, it's overbought too short term, but once it gets out, clears the 50 level properly, you say you get several closes above, say, 53, 55, it's going to the moon. Oh,
yeah,
really?
I agree.
Yeah, we'll be looking at, and also for reasons that Mike Maloney keeps pointing out, which there's no physical silver to buy.
Yeah,
And so, when we come to the lot that I've got amongst those charts I sent you, I think is the 45-year chart for silver, where we'll see that dramatic, not dramatic. It's basically the same chart you're seeing there, but expanded, so that you can see it in much more detail, the cup and
yeah. And
handle.
so it looks like we're here in terms of silver.
Hmm.
So
Oh
there's,
yeah, yeah, because silver's kind of like where gold was when it was at 2000.
yeah, that's amazing. And
It is amazing, yeah.
before we go to the next chart, just want to tell the viewers that if they'd like, they should check out, and I'm going to bring you a website, clivemaund.com. And yeah, there's really good premium technical analysis. And yeah, so I'm going to put a link to it below in the description. Okay.
Yeah, one of the things about the last few weeks, Mario, is we've been making so much money, not hitting them out of the park one after another, it's got me a bit nervous, because I think, this is getting too easy. You know what I
Yeah, no,
mean?
I know the feeling. I mean, the miners that I have, they've come off a little bit
Hmm.
in the last
You,
few.
you know, you see, it's that old saying. I think I mentioned it earlier. Bulls make money, bears make money, and pigs get slaughtered. So I thought to myself, well, being a pig here, I've got to be a
Yeah,
got a bit, big looks kind of eyeing the exits a little bit just in
at
case,
the
which
at
is,
the
but as I say, it's a point I know I keep emphasizing, but if you've got physical gold and silver, you do not sell them. You hedge if you think it's going to be a correction. You hedge, and the best way to hedge, in my opinion, is by puts. For example, you can
yeah,
buy SLV
yeah,
puts to hedge against silver, but it's just insurance. You're not
yeah,
really
I
doing it.
agree. I think it's tricky because um, people usually run their losses for a long time. And then when they're in profit, they take it too early. That's the other
Exactly.
thing
Yeah.
as well.
Yeah. Yeah.
So it's a really tough mental exercise. I think Jesse Livermore said that the real big money is made through patience. So if you know you're right, you
Mm.
just sit there, you don't leverage,
Well,
and
one of the sayings, which I think is actually foolish, is that somebody said, "Oh, you can never go wrong taking a profit." Well, that's nonsense because if you sell something that goes says that's doubled in value, and then it goes up to 10 times, then you have gone wrong, in my opinion.
yeah, I agree, especially if there's high inflation and the currency that you took your profit in is going down the drain. Uh,
Yes. Yeah.
is it, let's see the silver one. Oh, is this the chart of the ages you want to look at?
Yeah, we could look at that now because it relates, of course, to the
Is that
long-term
the
chart
long-term
for
chart?
gold that we
Yeah,
just looked at. Yes.
yeah. Let me, or it's also, did he also call
Yes.
it the mother of all teacups or something like that?
No, I never called it that, but of course
Oh,
you could
okay.
say it would be an apt description. Yes.
Yeah.
Well, I think that's in all my years of doing this, I can say all my decades, because I started this back in the 1980s. This is probably the most beautiful example of a chart formation I think I've ever seen. It's incredible. It's absolutely incredible. And what's even amazing about it is you get a Russian dolls effect where you know how these Russian dolls, one fits
Yeah.
inside another.
Yeah.
The handle of this ginormous cup and handle pattern going back to 1980 is itself contains a junior cup and handle, or lesser order cup and handle. It's a simply amazing chart. And right now, at the most exciting time of silver for all, because it's breaking out of the top of it just in recent days. And it looked like it was going to get beaten down late last week, which got me nervous, and it still could be. I wouldn't be completely sure of it until it gets above 55, say. But then I think it's going to really motor. But it's an extraordinary thing because gold's already so overbought. But I watched a video by Mike Maloney and Alan the other day, and he was pointing out all kinds of factors relating to silver, how it's basically becoming, he calls it unobtainium, which is that
Yeah.
material in the avatar. There's such a heavy short position in silver by some of these, big banks and so on, that uh, a blistering short squeeze could develop here. But, you could see silver gap up towards $100 in no time.
Mm.
Maybe 150, 200, who
I know,
knows?
just like do you remember nickel back in 2022? That
Yeah,
massive
yeah,
short squeeze there.
yeah, because that these people are going to, it's like going into a crowded theater in the old days and shouting fire, they all people jam the exits. And if you get a fat lady in the exit in front of you, you're in real trouble.
That lady. Right. Well, I remember the first time I heard of a teacup formation, and I'd been working in the market since the late 80s, early 90s. The first time,
Yeah,
2003 or 4, and it was Jim Sinclair on JS Mindset. He was talking about the
yeah.
teacup and handle that gold formed from 1996, and I think the top of the teacup at the time was like
Yeah, well,
$415.
Well, that's why I think it's very
One?
appropriate that I saw you drinking tea just before we started
Yeah,
this
I've
with
got
your lovely tea.
my wife's cup of tea.
And I think that's highly appropriate, Ariel,
Mm,
given
mm.
what we're looking at now. So you can continue to
Yeah.
take another sip there. Um,
Where do you want
yeah,
another chart here? This one,
yeah, this was
or do
this
you
got
want?
me.
Is there something else you want to say about this one?
Yes, on this chart, it's actually one other point worth mentioning, which is that the silver to gold ratio. I tend to put it as silver over gold, even
Yeah,
though the numbers are difficult to make sense of. But it's the actual ratio that's important. And you can see on that silver over gold chart towards the bottom of the chart that the silver over gold ratio is still at a very low level, which
yeah,
means basically, as I said, talking to you before, that there's very little, still very little public participation or retail interest in this sector. Relatively speaking, it's just starting to come to life, which means that this sector bull market is still in its it's still in its early stage. I wouldn't say very early stages, but it's still in its early stages, and it's got a lot further to go. That's what that silver over gold ratio is telling me.
in its infancy, I guess,
Yeah, still very
or
much. It's becoming. I think
teenage
it's
years.
well, no, I think it's becoming a toddler.
The toddler. Okay. All right. What else have we got? Which I've got a silver chart, a silver 4 month chart. Is that the
Yes, yeah, we could look at those. Mo. I think the silver 4 months, yes, because you will see that there was a potentially bearish candle on Thursday. It was called a
yeah,
shooting star. That got me nervous, especially as it didn't close above that level on Friday, or
yeah.
it didn't move above the intraday high of that Thursday bearish shooting star candle. That got me concerned late last week and over the weekend, you could say. But of course, yeah, I think it's moving up above that high today, or this
Yeah,
morning. I'm
that's
not
been
sure.
it's been negated, I guess. Is that the
Yeah,
spot?
it needs to close above, what is it, 51. I'd be more comfortable if
Yeah,
it
that's
closed
for
above,
the
say,
week or for the day?
yeah, for the day, I would say it needs to
Yeah,
close above 50, say 52, or really basically above those intraday highs of Thursday and
yeah,
Friday in order to negate that somewhat bearish short-term implications of that pattern. Because of course
yeah.
it's very overbought, it has been for weeks. But, as we were saying earlier, the physical supply drying up completely,
Mm.
what's to stop it?
Yeah, and as we speak here today, Monday, silver now, spot silver is at 51.45.
Hmm.
This morning, London time, Clive, I noticed that the spread between the bid and offer in spot silver was like 40 cents, which
Right.
basically means that the bullion banks quoting the price they're they're having trouble, so and they don't want to deal, so that they will make the widest bid and offer possible, which basically means yeah we're like shut right now, but now it's narrowed a little bit. I've
Hmm.
got another one, SLV. You want to look at SLV?
Yes, yes. This is another thing that made me somewhat nervous, the SLV
Yeah,
chart, because this chart shows, for reasons I'm not sure about, the stock charts no longer shows volume on the metals charts, which is a real nuisance. And it's, as far as I'm concerned, it's something they really ought to address and fix. But I found a way around that in stock charts, which is to use the reliable silver proxy iShares Silver Trust code SLV, which we see here. And you can see how volume ramped over the last few weeks. It became increasingly overbought. And then on Thursday, there was a really big, huge volume when that bearish looking candle formed on Thursday, it approximates to what's called a hanging man in candlestick charting. And that was followed by, with Friday's close, it made a short-term bearish pattern called a Harami cross. Now, that appears to have been negated by today's close, but I'll have a look at it later. Because
okay,
here where I am in Chile, it's about 10 in the morning.
yeah,
I'll see how that closes tonight, but it needs to close above the highs on Thursday and Friday to negate the bearish implications of that pattern, which is what made me a little bit nervous. And I've engaged in some selective profit taking late last week. Just because one reason being that if you take profits and things that are wildly overextended, you've always got the option a few days later to buy something that's less overbought and it's looking promising.
Yeah, and if the market continues to go higher, you can
Mm,
always buy on the
yeah.
big breakout.
Well, yeah, and you were mentioning old the late Jim Sinclair a while ago, Mario, and I used to talk to Jim Sinclair at times before he died, and he always maintained faith in his Tanzanian TRX Gold, it's now called, but it used to be known as Tanzanian Royalty, as you probably recall.
Yeah,
And old Jim never lost faith in his mine, the Buckreef mine in Tanzania. And I recommended the stock on clivemaund.com in August, and it's taken off like a rocket. And it came out with amazingly good results a few days ago. I don't know if you're able to pull that up and present it to viewers, but
yeah. I'm bringing up a chart here, and I'm going to share it in a second. Let's bring a weekly chart. That's probably better.
well, daily would be actually
Daily,
better if
daily.
possible,
Yeah.
because
Let's bring the
what
daily.
happened?
Yeah, I used to own this stock, but at a much higher price, and then I just gave up. Uh,
Hmm.
and but
Well,
I remember it trading at $7, so I think there's probably still a long way to go for this.
you'll see how. I mean, it was recommended on the site in August, about a month before that big breakout, and then it took off like a rocket. And what happened is it formed about a week or two ago. It formed another flag, small bull flag or pennant, and then it came out with amazing results a few days ago, and future forecasts a few days ago came out with excellent results for production and so on, and it gapped higher on huge volume
Well, looking at
some
this,
days later.
if you're a trend follower, and I don't know if you've heard of the uh, turtle trading system. They buy anything that breaks through the 22-day or 50-day, 55-day high. So this really definitely has momentum, this stock.
Yeah, yeah,
Yeah,
yes.
yeah.
Um, I looked at it yesterday and I thought, well, is it come, now we've got this good news out, is it maybe time to take some money off the table? As far as I can make out, looking at it on a longer term chart, it looks like it's on its way to a resistance level somewhat higher. I
Yeah, I
think on this
mean,
chart.
taking a little bit of profit, I guess,
Mm.
if you bought it at
Well,
36.
I'd rather, if provided gold holds up, it looks to me like it's headed to those peaks we saw. I don't know where it is back. Yes, it looks to me. No, I think it's headed to those 2021 peaks initially, which would be, where is it, 125 or something? And there's a lot of resistance there where you've got it right now.
Yeah,
Yeah,
yeah.
yeah. It could be headed there
One
short
one
term.
fifty, 150. Yeah, yeah,
Yes, yeah.
yeah,
I can see a line of resistance there. It's
yeah.
got the momentum to get there, I think.
Do you look at, we could look at the Fibonacci. I don't know if you look at that retracement. You take this top and this bottom. Uh,
Yeah.
I mean, we're not even close to the 38.2% retracement.
Yeah. So
So a lot.
I'm rather minded. I did think initially, oh, well, good news out, good time to take profits. And I thought, wait a minute, this thing's got a lot of momentum and it's
Yeah,
probably going to head on up for a while.
yeah. Anyway, it's a shame that he's not around to see it coming.
Yeah, that's kind of sad because he always maintained the faith, but I'm afraid this new bull market has outlasted some of us. In other words, it took so long to really get going
Yeah.
that some of the old warriors have passed on.
Mm-mm. Clive, have you got any final thoughts for the viewers, like
Um, well,
psychologically and technically and
yeah,
fundamentally?
I think the main thing is at a time like this when when all other fiat currencies are losing value so fast and you're trying to maintain purchasing power, you need to have your money in hard assets like gold and silver. And the main point here is that gold and silver, as we saw on that long-term silver chart, silver is headed much, much higher. into into maybe $200 or $300, maybe higher. It's headed much, much higher. And so if you're a holder of physical gold and silver, really you don't need to worry about anything. Once I would say that when the market gets extremely overbought, like it is now, like gold is now, and like say precious metal stocks are now, and if you're sufficiently sophisticated, you can hedge at extremely overbought points to as insurance to cover yourself against any sudden knockdowns short term. But if you do see any kind of big downdraft, like as is occasioned, for example, by a crash in the stock market, if it happens, that would present an enormous buying opportunity.
Yeah.
So you can insulate. What I'm saying is, you on this sector, concentrate as much capital as possible in this sector. But when it gets extremely overbought, if you've got the capacity to hedge somewhat, you can actually insulate yourself against any short-term drawdowns and even make money out of it. And then if it does get knocked back for any reason, you just swap out of the insurance policy, which is puts or shorting whatever, and just deploy more capital in rotate into better looking stocks that are going to go back up.
Yeah, I agree. And the other thing I would say is that avoid leverage because this sector is already very explosive and you don't need the leverage. Uh,
No, no.
don't be greedy.
Yeah, don't be too greedy. It's like,
Too greedy. Too greedy, yeah. Don't be like what was in Trading Places? Is it no, not Trading Places, Wall Street. Gordon Gekko, greed is good.
oh, I'll tell you a little anecdote from that. That film has got a lot of black comedy in it. Wall Street with what's Michael Douglas, isn't it?
Yeah.
And there's this novice trader in a busy dealing room in New York, right? And he gets started, and he wins the confidence, I think, of somebody
Is it Bud Fox, was it?
I can't remember, but he said. But what happens is the market goes against him, and he loses all the money. He comes in the morning, and he's sweating, and wringing his palms and so on. And he said, "Oh no, I've lost all that money." And the trader in the next desk says to him, looks at him, and he says, "It could have been worse." He said, "It could have been me who lost it."
All right, great. All right, thank you, Clive. And it was nice speaking with you, and we'll keep in touch.
Yeah, likewise, Mary. Thanks very much, and have a great day, what's left of it, and look forward to speaking with you soon.